Good morning, everyone. Shan Saeed is back with Be Global in 3 minutes. Today we have 4 interesting topics. Number one, I wrote an article 2 days back on MMT, Modern Monetary Theory. Second is I have been sharing in the market the yields are going up. When yields are going up, the inflation expectation goes up dramatically. The third is the IPO market. IPO market is very hot because the equity markets are pretty hot. And last not least, my favorite topic, oil. I have been doing romance with oil for the last 22 years now. I have been following the market, gold, oil, silver, so it's in my blood. Firstly, is MMT becoming the mainstream? So I wrote this article for Sun Daily newspaper. When I was invited by PNB on 30th October 2019, I shared that I am not a big fan of MMT. Why? Because it's very simple. It looks very good on paper, academically speaking, that you can borrow and you can spend as much as you can. You monetize the debt and put it on the balance sheet. It looks very fine. There is nothing wrong in terms of legal boundary. There is nothing wrong with the accounting boundary. The only challenge MMT has is the confidence boundary. And if you recall, in 1977, US dollar was facing similar problem. And what MMT is doing, it is encouraging people to spend money. But people don't realize at what cost. If you can spend and borrow money today, what will happen after 1 year? Eventually you have to pay for that MMT. So I wrote this article and I still believe that my proposition that I'm not a big fan of MMT or QE. The main challenge for the US economy is that they have to have a prudent monetary policy in order to drive growth, and most importantly, the only factor that drives growth, the GDP, is the productivity factor. The second is T-bills. Since February, the T-bills have gone from 1.15 to, as of now, which is 17th March, 1.62. 40% increase in the last 37 days. That clearly signifies that investors are expecting inflation to go up. So once inflation will go up, eventually discount rate will go up, and once discount rate will go up, the bond prices will come down. So interest rate has got inverse relation with the bond prices. So I think, as Warren Buffett said, if you are in the bond market, you are in the wrong asset class. So those sophisticated and smart investors, yesterday I was talking with Junaid in Canada, that sophisticated and smart investors are taking position in real estate, in gold, silver, and to some extent they are taking position in stocks. Last, my favorite topic. Yesterday I was invited over dinner by the top GLCs in Malaysia, Tabun Haji and Coop, and I was sharing my thoughts on the oil market. Oil is up 33% this year. At the start of the year, we shared with our valued clients that oil will meander around $50 and $70 per barrel. On 8th March, oil touched $70.83 per barrel. It has come down to $68.52 per barrel. The main challenge is for the oil market. There are two challenges. The two variables that will make oil prices on the upsurge. One is the geopolitical risk that is happening, and it will go deeper into the market. Secondly, production cuts. There are two major players, Saudi Arabia and Russia. In my opinion, Russia is calling the shots because Putin is very strong and he can survive at $25 to $30 per barrel. But for Saudis, they need between $75 to $83 per barrel to balance their budget, because Saudi Arabia has depleted its reserve from $850 billion to $400 billion as of now. So I think oil market is looking pretty precarious, and I expect oil market to go up. We have not revised our figures as yet, but by June I expect July IQI will revise the figures, and expect oil prices to go between $73 and $87 per barrel. That's all for today. See you next time. Thank you. Bye bye.